And I'm going to now pass it over to Shaun Cathcart for his remarks this morning. You're on, Shaun.
Well, thank you, Craig, and thank you, Melanie. That was great stuff. Very interesting. I'm sure that they're having conversations like this all over the place these days. I guess looking at some of Melanie's charts about the housing market and some of the ups and downs you've had over the years, that's what I'm going to zoom in on today. That's sort of my area of expertise, and these presentations that I try to sort of put where we are today in a historical context. As Melanie mentioned, I'm going to start off at the Canada level. I know that's what we're all reading about, and that's just going to set the stage for how we tend to look at the market. I'm going to look at demand, supply, how that affects prices, and how it has historically, and where we were before COVID and what COVID's done as well. And then once we all have an understanding of that, then I'll zoom in on PEI, and we'll look at, obviously there's a lot of similarities there, but it'll give us, we'll be able to focus more on the PEI story once we know sort of what we're looking at with respect to things like overall inventories and months of inventory, and how that affects prices through time. All right, so we're going to start at the start, which is the supply story. Anyone that tells you that everything that's going on right now is because of COVID is wrong. This has been developing for a very long time. I do monthly reports on this stuff, and I can go back to starting to tell the story sort of 70 months ago, around the time of the oil price crash. And there's a lot of other stuff that happened around that time, and we'll talk about that, including a major ramping up of immigration policy across Canada that I won't talk as much about today, because I know there's other people that are going to talk to that. And in the PEI context, obviously the big drop in the Canada-US exchange rate at that time was, I believe, a major factor, given all the vacation rental properties out there. But let's start at the start. This is Canadian active listings as measured at the end of every month, going back about 25 years. So all the listings on every MLS system in Canada, basically. And I think you can sort of tell what the story is here, but I'm just going to go through some points in time that are of interest. This is about 2015, when things were at their highest. It wasn't necessarily some crazy buyer's market, because of course we've had a growing population and housing stock this whole time. If these things weren't cyclical and they stayed in a linear sort of a fashion, this would just be setting records as far as the eye can see, and things would be in balance. But that's not the case. Now, what we had around the time of the oil price crash was, of course, a major migration out of particularly Alberta, where so much migration had been going. Basically, all the migration in Canada had been going to Alberta for years. All came out, and a lot of it went to the Lower Mainland and the Greater Golden Horseshoe. And so you'll recall in 2015, 16, early 17, it was Vancouver and Toronto and those environs that were really sort of got ahead of the trend, the longer term trend that we're on, and really flared up. And what happened was the governments of BC and Ontario, and then the federal government with a stress test, came in, citing, those local governments cited the heat in the housing market. The federal government cited financial stability with the stress test. Anyway, the point of it all was to limit what people could borrow, and to sort of break up some of that psychology, and to slow things down for a while. And what that did was it, slowed down sales, which stopped that absorption of supply for a while. It didn't reverse it, obviously. You can see here on this trend. And of course, under the surface of that, the population was still growing like crazy, and all the millennials were still turning 30. So the household formation under the surface of stopping people from borrowing money for a little while didn't stop. And we're seeing a lot of that come forward in a major way right now, and in the year that housing is everything, of course. Now, what happened was this sort of slow, boring market, where everyone was complaining about the stress test, lasted until about the summer of 2019. And what happens with housing market and news media reporting is that everyone stops paying attention after the spring and goes on vacation. And so what happened was this thing started back up in a big way in the summer of 2019, to the point that we were way down here at a 14-year low before COVID hit. So at the end of your arrow here, that's where COVID hit. And of course, what happened in the months immediately after the lockdowns is a whole bunch of people took their homes off the market, because it's a global pandemic. And you can all remember what that felt like a year ago exactly. And then what happened starting last summer was, of course, you'll know, sales everywhere went absolutely crazy and absorbed inventory all the way down to here. So this last leg is people buying up what was there, to the point that we're now at an all-time low despite a record population and a record housing stock that these listings could be coming out of, there's a record low number of them for sale. Now, what do the sales look like that are drawing down this inventory the way they are? This is a shocking chart. This is what sales look like over the last 30 years across Canada. And you'll see at the end here, this is COVID, the initial lockdowns, where we saw such horrible data and everyone said it's the end of the world. And of course, when we were tracking daily data, we could see that even as of right now, a year ago, mid-April, that this had hit a bottom and was trending back up quite quickly, to the point that by summer, we were sort of at normal levels again. And over the last 9 months, we've been setting record after record after record. And just to give you an idea, I mean, I've spent so many years analyzing all of these trends, and COVID just stretches this axis so much that I wonder what we were writing about back then. You know, what does this 2% decline mean? Of course, it's just, maybe it's a good metaphor for all of our lives in a time like this, that about what really matters. But in a normal year, in the last decade, this is annualized data. So it's monthly data, but I've multiplied it by 12 so we can get an idea of how it fits into a year. A normal year would have seen about 500,000 MLS sales in Canada. That's like a decade. That's a pretty consistent, you know, sometimes it's higher, sometimes it's lower. Where we are as of data published yesterday, which is March 2021, we're above 800. That's a fundamental shift. That's not a temporary flash in the pan. I think the biggest explanation for this is a lot of existing owners who may have been in their normal family home for the next 10, 20 years are pulling up stakes and moving around, bringing major equity with them, in many cases downsizing. So it's not first-time buyers trying to pass the stress test and borrow money. It's people that are selling a place that might be paid off and doing whatever they want because they're turning that paper millionaire status into actual money and moving around. That's, you know, in the resale market, that's one of the big reasons why these numbers have been so high. One of the reasons they've been able to get this high in March is something, I know we're talking about longer term trends here, but just to point out, we had speculated that the next story is going to be pent up supply. Obviously last year, what happened was if you didn't have a home to ride out this pandemic in, you wanted one, and that's the demand story. But if you did have one, you hunkered down and you weren't really inclined to give it up. You said, call me in 2022. So I think that as we get close to the finish line here with this COVID, or a finish line, I think we're going to see some supply coming forward. We saw a big rush of new listings in March, which enabled this number to go even higher. And we're still getting, as you know, multiple offers on virtually everything. And so if those new listings go higher again, we're hoping to be able to see even more demand play out on the sales side and get people into these homes that they want, and less of it overflow onto the price side, which is what's concerning everybody. Now, if you divide active listings by sales, you get the number of months of inventory. This is another 25-year chart here, and I put some lines in to denote, you know, up here would be a buyer's market, down here is a seller's market. Let's take a stroll through history here. The 90s was a buyer's market across Canada. Prices basically didn't do anything for a decade. And if this chart went back further, you'd see that this was way up here all the way back. And then in the early 2000s, we went into a housing boom for about 5 years leading into the financial crisis, where we were down in this sort of seller's market zone, and prices over that 5-year period doubled, including on PEI. Then we hit the financial crisis, and that was followed by about 5 years of what I would consider sort of soggy conditions. Obviously, there's a lot of government macroprudential tightening during that time. And we were sort of up around that sort of favoring buyers range. This is the time when you would go to sort of see 5 or 10 different listings, kick some tires, be like, I don't like the look of those shingles. That was that sort of market, and prices were sort of tracking inflation during that time. And then, of course, around 2015, we started to see things tighten up as supply started to fall. You see this sort of zigzag pattern here. This is, again, as I mentioned, you know, Toronto and Vancouver getting way ahead of this trend, and then having it be slowed down for a couple of years, but then resuming. But ultimately, if you look past that volatility, the sort of varying speeds of this trend, it's all been in the same direction, to the point that if you look at the tip of that arrow, that's where we were in February of 2020. So we were in a national seller's market having gone into one for the first time in 18 years before COVID. And so we knew something like this was coming. And then, of course, you know, COVID sort of took over all the headlines, and that didn't happen initially. But I think it sort of maybe the way that we've come out of the strength of the housing market coming, starting last summer is less surprising when you know the direction that we were heading sort of for 5 years heading up to COVID. At any rate, it's certainly been turbocharged by COVID, that demand supply imbalance where everyone really wants a home right now and fewer people are inclined to put one on the market has turbocharged that. To the point that as of yesterday's published data, we're at 1.7 months of inventory nationally. So that's completely off the charts, unprecedented. And that's why prices are doing that. This is the overall MLS home price index. We seasonally adjust it with StatCan. It's the smoothest price measure out there. And we can, again, take a stroll through history because this lines up obviously very closely with the market conditions that I've shown you. It's when people are saying it's a bubble, it's irrational exuberance. It makes no sense. It actually lines up exactly with all of the metrics that you can measure that could predict this. So it's not that surprising. Here's the tail end of that housing boom back in the early 2000s. Financial crisis is this little dip here, but this sort of soggy tracking inflation for about 5 years. This is where Toronto and Vancouver really shot higher. Then we had the stress test that slowed everything down. And then we had the conditions we have right now, since last summer, tightest market conditions we've ever seen, and prices do what they do when you've got the tightest market conditions you've ever seen, and you've got 3 and 5 and 10 and 20 offers on some of these places. Prices get bid up the way they're being bid up. This is the overall benchmark for Canada. It's up $120,000 since last June. It's up $43,000 in the last 2 months. Those February and March gains are the biggest we've ever recorded. That's why you're seeing all the concern out there right now. It's also because people start paying attention at the beginning of the spring, the news media, that is. I think that pent-up supply story that I'm hoping continues to play out is going to start to slow this thing down. But we're not going back to Goldilocks land, not too hot, not too cold anytime soon, because we've been moving away from that for 5 years. And ultimately, again, if you look, like I say, there's different speeds to this trend, but it's all in the same direction. So this is Toronto, Vancouver. This is the stress test. This is COVID, but ultimately, we're mostly the way here before COVID happened. And, as Melanie was saying, once that international immigration and population growth piece gets ramped back up, you've got another 5 million millennials and Gen Z in their 20s right now. They're all going to be that are going to have the nerve to turn 30 and form households in the next 10 years. And so I don't see the demand going away. And so I guess the point of this presentation, and I think what Melanie was talking about, what many of you will talk about, is it's great to have demand, but people need to live somewhere. And so if there's not enough housing, you better get swinging hammers one way or another, or you're going to have the situation that we're in right now. So what about PEI? Now that we sort of set the stage, I'm going to run through those charts little quicker and make sure that I'm staying on time here. You'll see a lot of similarities, but now that we sort of know what we're going to look at, I'm going to run through it in sort of the same way. Obviously, PEI is a little bit more volatile because we're dealing with smaller numbers. But I think if you sort of, we always say, sort of squint your eyes, you can sort of see a trend line under these numbers. This is home sales in PEI. And again, the 90s, a housing boom in the early 2000s. This is post-financial crisis. And then as soon as that dollar dropped, boy, did that, I remember my family went on vacation, summer vacation in PEI in 2015. We were originally going to go to Maine because I wanted to take my kids to the same beach that I had taken summer vacation on when I was their age. And then the dollar dropped and it was going to cost us a bloody fortune to go to the States. And I said, well, let's go to PEI. I love PEI. We've been there many times. So we were there, and where we were up in sort of Cavendish, like Stanley's Bridge, I think, it was a lot of vacation type rental properties, and every single one of them had a for sale sign in front of it. And that was that sort of peak supply. And, in the years that followed that dollar drop, it just seems like everything got bought. And PEI is actually, along with Vancouver and Toronto, the only other place that didn't really sort of follow this in a more linear fashion. It happened very quickly in 2015, 16, 17, this massive increase in sales. Slowed down a bit in recent years, but of course in the COVID times, what you're seeing up here is these are record level numbers here. You can see a couple sticks up here. These are December's. This is aberrant, but this is a trend. You've got the highest home sales you've ever had right now. This is our forecast you can see the two blue bars are 2021 and 2022. It's an error correction model. Obviously, we don't expect things to go into the stratosphere forever, that things are going to sort of slow down back in line with more fundamentals after the COVID sort of frenzy passes. But if I had to, if I had to speculate on my own forecast, I'd say this is conservative. At about 2,500 sales in a year for PEI. Right now, you're tracking closer to 2,600. So we're trying to stay a little bit inside of unprecedented. You don't really want to get way on the other side of things if they turn a corner, but I think it's conservative. And certainly if, you've got that immigration piece ramping back up, and as Melanie mentioned, if we start to get people realizing that they don't have to commute into an office anymore, PEI is a pretty nice place to live. And so that's where you could be getting that migration piece from elsewhere in Canada, along with, some of the issues that come with trying to compete for a house with somebody that just sold a place in Midtown Toronto. Let's call that a problem for another day. That arrow there is where you're tracking right now. And so, if things don't slow down, this forecast is going to get raised the next time we do it. Now, here's your overall inventories in PEI. Again, following a very similar pattern to the Canada number I showed you. For anyone that says, this housing supply shortage is because of COVID, that's where COVID happened. So you see that you almost have to I'd have to zoom it in for you to see the extent to which supply moved based on COVID. This trend has been going on since 2015. It's much bigger than COVID, and COVID's kind of a distraction in a sense from having to deal with these longer term issues that are already a problem and are only going to get worse. That's a 77% drop in the number of homes on the market at the end of every month in the last sort of 5-6 years. That's a huge drop. And but very similar to basically from Kingston East, everywhere from Kingston East looks exactly like this. If you took Ottawa, Quebec, New Brunswick, Nova Scotia, you could basically draw that line from 2015 to now with a ruler. It's so consistent. And so, I don't know, I have a hard time believing that anyone couldn't see this coming, but you got to get sort of way down here until when it starts impacting prices the way it is, that's when people start really freaking out. And that's what we're seeing in the media right now. So here's your months of inventory for PEI. Again, a very similar story. Buyer's market, seller's market, soggy, sort of nothing going on up until about 5 years ago. And then this, right from a buyer's market right through into a seller's market. And again, basically unprecedented right now. And so when you look at the average home price in PEI, it's doing that. Again, like everywhere else, that's a pretty extreme looking thing. But again, like a lot of that was going on before COVID. It's been turbocharged in the last sort of 9 months. There's your sort of nothing in the 90s, housing boom, nothing, tight market conditions as supply was absorbed, and COVID. And so you're sitting at about 330,000 for the average price in PEI as of yesterday's published data. That's up almost 20% year to date for the first 3 months versus last year. So again, no different than basically everywhere else. And, I don't want to say entirely predictable, but, 75% predictable. And here's our forecast. Again, if you look at the 2021 number, that's 300, you're already at 330. So, we don't want to get too far ahead of ourselves on these forecasts, by way of sort of waving a red flag for the government, bring in some new hammer down on demand. But, this is another one that we're on the conservative side. We're trying to stay within reason of history until we see evidence that things are completely unprecedented. And as time goes by, it's looking more and more that way, and we'll have to revise this higher. I've broken out a few local markets, places that have big enough sort of sales numbers that we can, that we're not too volatile here. I'm not really trying to differentiate. It's like, well, in Charlottetown, here's what's going on, whereas in Summerside, it's different. The point of putting these on, this is months of inventory, by the way. The point of putting these on is just to show that it's going on everywhere. So there's, whether it's not just in Charlottetown versus Summerside, it's not just in PEI versus New Brunswick, it's not just in Canada, it's in the United States. I've heard about South America, Europe. Australia, New Zealand is, it doesn't matter. It's very similar COVID era trends everywhere, but also within just the business cycle generally, and sort of the hesitancy of builders to build in the last decade after the financial crisis, along with some of the uncertainty brought by governments that keep coming in with these policies that mess up their planning and their business. It sort of gets us into a situation where we are. And you look at median prices in all those cities and towns, and they're all sort of doing that same sort of hockey stick thing. And so, what do we do about it? It seems to me the answer is pretty straightforward. If you're going to have demand as far as the eye can see for housing, that you might want to get building some housing. One of the conversations that we'd had in advance of this meeting, though, it's sort of about, and my data doesn't go back this far, but we can think of other times in history. I don't know if there's some instructiveness there, where we found ourselves needing a lot of housing right now. One of them would be in the 70s and 80s when all the baby boomers came of age, and that was a massive demographic shift from their sort of teens to their 20s and 30s. And what did we do? Well, we built housing for them. That's where the suburbs came from. They didn't really exist before that. And you can say what you want about tract housing and vinyl clad this and that and attached homes, but that housed a lot of people. A lot of people were able to live somewhere and own something and build a life for themselves in those communities. I don't know what the future suburbs look like. As Melanie said, we don't want to sprawl forever. Nobody wants to do that, but units of housing that can house families is something that's going to be needed. Another time was when all the vets came back from World War II, and the Canadian Wartime Housing Council became CMHC in 1946 to deal with that issue. At the time, it was called the Central Mortgage and Housing Corporation. And one of the things they did was I believe they gave out land. I know that my granddad got a half acre out in a farm field, which is now Central Ottawa. And they also gave out a ton of plans for these modest little bungalows. And my granddad went down and he got a plan that he liked and he built it himself. He was a carpenter. But there's a lot of other programs at the time to just build up enough housing for all of these people that suddenly needed it. It feels like we're kind of in a situation like that now. And obviously, it's a different situation. And I don't have the answers. I just have the data that sort of shows you what the issue is. I'm not a policymaker, and I'll leave it there. We really have an issue. I think that the only sort of potential near-term solution is if we do get a lot of people that were planning to list a home that are waiting until this pandemic is over, then hopefully that's going to at least take a little bit of the pressure off. But longer term, that supply's got to come from supply that doesn't exist yet. We need to build it. So I'll leave it there.
I wonder if you have any thoughts about the impact of people my age, boomers, who are about to retire, who are looking to downsize and leave their single family dwelling and perhaps move into a condo or an apartment or a co-op or something. Does that hold any promise for increasing the supply of housing? So
I've been, obviously in my entire career, I've been dealing with housing bears who use that particular story as they're going to flood the market. So I'll answer that question using some demographics. Housing, evidence shows that historically, at least, people don't tend to move out of that family home, that ownership housing, their community that they've lived in for so long. It's grandma and grandpa's house at this point, until about the age of 85. And I don't mean that that's the median age, that's the starting age where that becomes a big trend. And the boomers are currently aged at approximately like late 50s to about 75. So the front edge of the boomer, keeping in mind that the biggest group of boomers and the biggest group in Canadian society is the younger boomers, people in their late 50s to mid 60s. And so that's a ways off still. So that's going to be a trend someday. But the people I'm seeing move out of their homes right now are still silent generation people. My mom and dad's neighbor, who actually just passed away last year, who was a Korean War vet. And so these are trends that, demographics move very slowly. And so you can see it coming, but I feel like that one's still a ways off. I don't know if COVID's going to sort of maybe change that, that sort of getting out of the city, cashing in on that place. But I don't know. We'll see.
Okay, thanks, Shaun. The question that I can see in the chat right now, what's the actual reason for the increase in housing demand? Is it buyers seeking to move in or out, or speculators, or is it immigration? And I think you partly answered that, but I wonder if you can just focus on that.
So one of the big ones, obviously, that I think sort of flew under the radar somehow, but if you look at StatCan, the data they published, this is almost like their headline number. If you look at just the overall population in Canada in 15, 16, 17, 18, 19, it went like this, right? And that was all international immigration. And I think that that didn't get enough attention. I mean, when you go from 350,000 people a year increase to 550, that's a lot of people and a lot of household formation. And when you're coming from somewhere else, everyone's a first-time buyer. You're not adding any units of housing into the stock, you're leaving it somewhere else. And the other one is millennials and Gen Z. That's 10 million people. In the last 10 years, they've gone from their 20s to their 30s. And there's another 5 million coming up behind. And household formation tends to be pretty mechanical. I think one of the things that differs from history is that a lot of household formation of millennials was counted as like one person buying a condo. And we said, oh, we're building enough units. We're building enough units. These high-rise condos that, now that if you're in your 30s now, it's just not going to cut it. And so it's almost like that was household formation. And now we've got household transformation of a huge demographic that are all having kids now and need single family housing. And then COVID just, again, another trend that COVID has turbocharged. It's not only do I need single family, I want a bigger yard, a bigger house, and I don't have to commute so I can go further out to get it.
Interest rates are at rock bottom. Would you say that is a cause or effect of the housing trends you've described?
Well, it's an effect of the overall inflation as measured by StatCan, because that's what the Bank of Canada targets, and the weakness in the economy. And it's certainly not a headwind for housing, but I don't see it as being the major factor. It could be a factor in house prices rising faster than they would if rates were a little bit higher.